It's actually important for us to really get investors to really know beyond those familiar names like DBS, SIA, and Singtel.
Yeah, that's all what everyone is talking about.
Yes, precisely. I mean, there are a lot of other good stocks, good companies. They are traded on the SGX. We have about 600 over companies trading on the SGX presently. If you look at our Singapore market, this year has been fantastic. STI is on
all-time high.
right?
All-time high?
Yes, it is all-time high. 4,411 point, I think.
STI index.
Beyond that, right? Even if you look at some of the small cap, mid cap companies like Bondstead, Centurion, and LHN and Food Empire, all these it may not be very familiar to the normal retail investors who don't really look at the market, but they have been performing very, very, very well. The goal isn't to, time every move, or to catch every rally, to make money out of every stock. We can't do that because there are so many stocks. We just need to be patient. Market will go up and down.
Hello Dan, morning.
Hey, hi James. Good morning.
Thank you for coming back on the second time.
Thank you for inviting me.
Yeah. Okay, so for those who don't know you yet, can you introduce yourself again? Yeah, thanks.
Yeah, sure thing. Good morning, everyone. So, my name is Dan. I have been in the stockbroking industry in the investing space for almost, actually, this is my 24th year. I'm currently a trading representative of, some of you may have known, a remisier with Federal Securities, as well as SGX Academy speaker. And from my dual role, right, you will see that I work very closely with retail investors, whether it's advising my client or whether it's advocating financial literacy, be it whether it's as a TR or as a SGX Academy speaker. At the heart of it, I think it's all in the ecosystem. I'm passionate about helping people to build confidence in their investing and, of course, to add value into their investment journey.
Thank you for sharing. So later on, we will dive into more about the SGX Academy speaker thing. But given that you're in the industry for over 20 years, 20 plus years, share what keeps you motivated after all this time.
Well, yes. James, in fact, it's 24 years. October is my 24 years anniversary.
Wow, congrats.
Thanks. Well, I must say that this 24 year has not been very small sailing. I mean, as with any other career, any other occupation. So at the first time when I joined, right, back in 2001, it was purely due to my passion and my interest in the stock market. Okay. I mean, I had my good years in the 2000s, okay, until as some of you may have known, the penny stock crash, okay, in 2013, where everything has changes. So back then, right, in the 2000s, we are seeing a lot of contra trades, whereas after penny stock crash, we are seeing a different profile of the investment community. So the landscape have actually changed quite a lot. And as to your question, right, what have been keeping me motivated? Well, I mean, this stock market, right, is just like a living thing. Okay? So every day is different. You can't expect the same thing on the stock market every day. And there's always something new for us to learn. Be it whether it's the stock market mechanism, whether it's the macroeconomics or even the company specific. Okay, but more than that, right? I think what really keep me going, besides the ever-changing landscape, the excitement and things like that, is the people that I met along the way. I mean, I met clients from different walk of life. I mean, from CEO all the way to maybe a cleaner, a toilet cleaner and things like that. And all of them, right, bring a new perspective to investing. Okay, so I'm very grateful for that. And also, I also get to meet fellow investors because I myself is an investor. And of course, I mean, people like you yourself, James, a fellow influencer in the investment space, which I'm grateful for meeting and all the discussion that we have so that I keep myself abreast with all the market news and things like that. Yeah, so this is, all the different kind of factors that really keep me going for the past 24 years and hopefully for more years to come.
Yeah, okay. Yeah, we always catch up, right, during all these SGX events and stuff like that. Yeah, so talking about the ever-changing nature of this stock broking industry or just stocks in general. So we have this newly launched EQDP program, right, which has been a massive talking point lately with all the news also covering. So how has that sort of impacted your role or what you are doing right now as the remiser?
Well, I have to say that these EQDP, we call it Equity Development Program, has been very timely, and I think is very, very important. Well, I mean, just for context, so what happened is that I think MAS set up this review committee sometime back in the late 2024, and in early 2025, this EQDP is born. And this is very important because for the longest time, right? I mean, well, our local market has been staying, resilient and relevant for the past decade. Okay, ever since the penny stock crash, I think most of us would agree that there's still a lot of room to broaden its appeal and to really deepen these investor interest. So it's actually important for us to really get investors to really know beyond those familiar names like DBS, SIA, and Singtel.
Yeah, that's all what everyone is talking about.
Yes, precisely. I mean, there are a lot of other good stocks, good companies. They are traded on the SGX. We have about 600 over companies trading on the SGX presently. But a lot of retail investors, okay, they will just know the very big name,
Banks and the REITs and
precisely. Yes, and I think this EQDP, right, is here to address this issue. And I think there are two parts to it. Okay. So one is to actually let the SGX market gain more visibility, or to make it a vibrant market, so that companies who want to seek a listing would consider Singapore or SGX as an option. Okay, that's to bring in the company. To get the company to list here. And number two, right, the second part of it is actually to create awareness to investors. Okay, more on the investment community side. So our Singapore market has, as I mentioned earlier, our Singapore market has much to offer beyond the big names. But don't get me wrong. I mean, the big names is there for a reason. They are still a very good. They are still very good investing stocks. I'm just saying that they are actually much more beyond them.
Yeah.
So, as a trading reminder, right, I think it's important for me to transmit all this information to the investing committee so that they can make more informed decision. So it's more of a ecosystem. It's more of a fin-lit thing. It's more of spreading these good news, or rather this vibrancy into the investing community. And that's how my role has changed in this aspect.
So you actually, as a remiser, so you have received more inquiries lately regarding this EQDP.
Definitely. In fact, we also have start more. I also have start more conversation with my client, with even with you, and with a lot of fellow investors on which name would be likely to be in benefit from these EQDP, and things like that. Yeah, so it sparks conversation. It sparks ideas bouncing around. I think which is good because we need trading ideas to bounce around. It doesn't matter whether it's right or wrong, but at least it strikes some conversation between it, you see.
So has it changed any way in how you approach your own trading or investing strategy?
Okay, so when it comes down to my personal investment strategy, right? Frankly, it haven't changed much. Okay. Why do I say that? Because well, I have been a remiser for the past 24 years. Unlike most investors, my job is to look at the stock market every day.
Yeah.
Okay, so without this EQDP, right, small mid cap is already a sector that I've been looking at for the past 24 years, along with all the big cap. Okay, I'm not saying that just because I'm a remiser, I'm better than most investors in terms of skills or what. Okay, that's not what I meant. But I think all would agree that by sitting in front of the market, right, I would have more experience, okay, on the market cycle, more in-depth, and on the market mechanism, the movement, the trading price aspect of it. Okay, and of course, beyond the big caps, right, I also have more eyeballs on the more and mid cap as well. Yeah, so in a nutshell, what I'm trying to say is that things haven't really changed much. because before this EQDP, I have already been looking at this stock market as a whole, be it whether it's small cap, mid cap, or the big cap. But I do have to agree that this EQDP is very much timely because it actually helped me to gain more insights into the company's fundamentals and some of the news-driven events. So this gives me a better perspective of the investment strategy that I already have. So the strategy itself have not really changed much, but it actually aid in the analysis of that strategy.
So other than insights, the more important thing is whether you got portfolio gains or not.
Of course. I mean, portfolio gains.
Everything go out, right?
I mean, now if you look at our Singapore market, this year has been fantastic.
Yeah.
STI is on
all-time high.
Right?
Is it all-time high?
Yes, it is all-time high. 4,411 point, I think.
STI index, yeah.
Yes, and beyond that, right? Even if you look at some of the small cap, mid cap companies like Bondstat, Centurion, and LHN and Food Empire, all this has it may not be very familiar to the normal retail investors who don't really look at the market, but they have been performing very, very, very well.
Yeah,
so
triple digits.
Yes, so congrats to those who has been staying invested in the Singapore market. I'm sure most of us has relatively more gain than last year. I believe so.
So like talking about this, right? Given that a lot of stocks have went up because of EQDP, right? Do you think there are some sectors or teams do you feel that are still undervalued right now?
Still undervalued? Wow, that is a very good question because
very hard, right?
Everything went out already.
Everything went out.
Instead of using the word undervalued, I would prefer to use the frame it in the way that which team I'm currently thinking
focusing
on which sector or which team that will still be benefiting from this uptrend in the next few months or even the next 1 year. Personally, I'm very optimistic on two sectors. Okay, of it you have just mentioned, that is the REIT sector. Because what happened is that the rate cuts optimism has been quite high, pretty high in the recent months. Okay? I mean, for context, right? So what happened is that the rate hike cycle stopped or rather ended in July 2022. Okay, that was a long time ago, but it wasn't until December 2023 where this FOMC chairman Powell said that, that's the end of the rate hike cycle. So now we are going to rate cut cycle. But as you can see, right now it's 2025, October, and we are only seeing maybe 1.25% cut from the high of the 5.25 to 5.5. So there is still a long way to go for rate cut, be it whether it's fast or slow, but we all have to agree that, I think most would have to agree that the rates is still very high and there are still a lot of downside to go. Okay. On that aspect, right, I would say REITs will benefit. Okay. I mean, REITs like, without really going to in depth, right, the more established name will be, of course, the CapitaLands, the Maple Trees, the Keppels, the Frasers, things like that. Of course, for investors who really want to be more conservative, they can look at REITs with Singapore-centric, okay, like CapitaLand Integrated Commercial Trust, Fraser Centrepoint, OUE REITs. Yeah, so these are very Singapore-centric, and their properties in Singapore where you can really feel and even touch, if you just go to the mall, to have a feel of how they are performing. So REITs is a sector that I'm looking at, and for those investors who are really busy, well, we have REITs ETF. So there are five REITs ETF currently on the SGX, but two of them are Singapore-centric. That is the Lion Philip S-REIT ETF and the CSOP IH S-REIT Readers ETF. So for investors who really want to get exposure to the REIT sector, but they are maybe not familiar with the individual REITs, I didn't really have the time to go into the fundamental of individual REITs. REIT ETF is definitely another tools that they can employ to gain exposure to it. Okay, and the other sector that I'm personally bullish on is the renewable sector. Okay.
Renewable
So,
sector.
yes, renewable sector, because despite US President Donald Trump's affiliation to pumping out, but I think that, going forward, okay, renewable sector, renewable energy sector is one sector that is going to be a very big theme going forward in the next 5 to 10 years. Okay, I mean, everyone is talking about sustainability, you know,
Yeah.
being environmental friendly and things like that. Okay, so currently, two of the biggest renewable energy players on SGX is Keppel Corp and Sembcorp.
Yeah.
Okay,
I
yeah.
guess
So
that two names also.
yes. Well, yeah. So these are the two sectors that I'm really currently looking at, lah.
And talking about the REIT ETFs, just curious, are we able to like dollar cost average or like have regular savings plan into this?
Yes, of course you can. Over at Philips Security, right, Puyam, right, you can even do it yourself. The reason is because SGX has put these ETF, right, the minimum size of the thing that you can buy to one shares. Okay, and in Poyans, right, minimum count. So cost is not an issue anymore. Yeah, there's no minimum count.
One share. That's quite interesting. Okay, so talking about the sectors, right? You mentioned REIT sector as well as renewable sector. So out of both these sectors, right? Can you share just maybe one case study that you are currently watching closely? One stock, lah.
Sure. By no means a disclaimer. This is not a buy call. I think currently I'm looking at this Sembcorp. Okay.
Sembcorp.
So what happened is that
It's come down by a bit, right?
Yes.
Around $6.
Yeah. It's about $6 20 plus. $6.22 or 24 cents. So just for context, what happened is that for the past 2-3 years, right, Sembcorp has a very amazing uptrend. Okay. To hit an all-time high post the demerger from the Marine. Okay, so since the demerger, it hit an all-time high of about $8 plus. But since their first half 2025 result, right, as you mentioned earlier, that was a big drop. Okay, because the market is a bit, I would say, a bit disappointing with the result. Not because the result is, in my opinion, it's not because the result is no good, but it's because the expectation is very high. So among the factors that people don't like on the first half 2025 result was a combination of weakness in the gas business. Okay. And of course, the higher electricity in the China sector, in the China renewable sector, and of course, a lower wholesale electricity price in Singapore, because last year, right, as we all pay utility bill, you know that the electricity bill has actually went up a lot. Okay, so this year they actually came down a bit lah. It came up a bit lah. Okay, so market didn't really take that as well, and the share price has been toned down to as low as $5 plus. But mainly they have been trading around the $6 mark. So for the past 6 weeks, right, they have been trading between the range of $5.95 to about $6.20. Yesterday, or rather Friday, this week, the end of this week, we finally seen Sembcorp moving up above that $6.20 mark.
That range, consolidation.
Yeah, above that range, yes, to hit a high of $6.29 before settling at around, I think, $6.22. So this kind of trading pattern, right, is something like, building energy like a solar panel on standby, just ready to, just on it, then it explode. Yeah, so assuming that the breakout is a confusing breakout, I would think that there are more upside or more room for the uptrend in the next few weeks to come. Yeah.
Nice. Thanks. Later on I will add in this stock chart. The solar panel boom going up.
But you were saying that there's a disclaimer, it's not by call.
Disclaimer, I'll put it in the description box, no worries.
Yes.
Yeah. Thanks for sharing on the Sembcorp lah. So okay, now let's maybe jump back to your profile a bit. You're also a speaker with the SGX Academy, and I often see a lot of your workshops, like those 1-2 hours workshop, right? So how has teaching and educating all the retail investors helped to shape your own mindset, investing mindset?
Well, I think it's everything is an ecosystem. Okay, it's just a very good ecosystem. And I think when you, okay, I wouldn't go as far as to say to educate, I will say to share. Okay. So when I do sharing, right, I think it forced me to slow down and really think about why I do what I do. So when I'm preparing for a session with the SGX Academy, I can't just say, hey, this stock looks good. This is a trend, this, something like that. I need to explain the reasoning, the fundamentals, the investor psychology, and the risk management of the point that I'm making. Okay, and that process of breaking down these things, right, these thoughts, right, often sharpen my own decision making as well. So that really forced me to slow down, to really do a second step, a second deeper analysis on the thing that I think is correct. And I mean, it's also very humbling that because when you interact with retail investors, you realize that everyone comes with different goals, different risk appetite. I mean, I met retail investors who are just starting out. Okay, I also have met some retail investors who are working towards their retirement. You know, and so this meeting of people from different walk of life actually remind me that investing is not just one size fit all. Okay, and it's really about finding what fit your own temperament and your own profile. So as I grow older, right, my investment strategy also have to change because my priority is different. Also, when I'm younger, I'm thinking of building a bigger portfolio, growing my portfolio to feed the family. But now, as I move to retirement, maybe I'll be looking more on the recurring
Passive
income,
income.
passive income, we call it dividend portfolio. Yeah, so there is a shift. So we have to really shift our
Adapt.
mindset depending on the life stage that we are.
Yeah.
Yeah. So I
Agree.
mean, in short, right, what I'm trying to say is that by sharing through as an HS Academy speaker, it actually made me a more patient and more disciplined investors. And when you share, when you teach, you don't just chase the noise. Because you just say, hey, this song is very good, very good, very good. Your audience can tell you that you are pushing your style.
Cheating them.
I won't say to say as cheating, but you're enforcing your idea onto them. Okay, so
Correct,
you need
correct.
to know the reasoning, why you say what you say, things
Mm.
like that. Yeah, so I will apply this same mindset on my own investment strategy as well.
Thank you, thank you. Yeah, the
Yeah,
education part is the most important lah in this aspect.
yeah.
And I do see that you are a KOL or key opinion leader on many platforms. So you have your own LinkedIn. So for all the readers you want to follow, then I will leave his LinkedIn link down in the description box below. Okay, as well as Invest SG, Investing Notes. So you have so many platforms, right? What is the most rewarding part? How actually do you keep up with all these? And what is the most rewarding part about sharing all these ideas? Yeah,
Well, okay. So there are two parts to your question. How
keep
does
up
it
with
does
the.
this sharing benefit me? Well,
Uh-huh.
even back in schools, right? I'm those students whereby if I write something, I
Mm,
remember better. You know
mm,
what I'm trying to say? So if I
uh,
just read, I tend to forget about it. So by coming out with all these daily updates, weekly updates, I'm actually
mm,
also helping my own self to
mm,
have a better grasp of market movement, of what is happening around the world and things like that. And as to your second part, what is the most rewarding? Well, the rewarding part is definitely the connections. Okay.
mm,
So in the past, right, as a reminder, we just sit behind the desk, we just talk to client. So that is about the people that we talk to. Okay. But now that with internet and things like that, even we now posting on investing SG, investing note and
mm.
invest SG and get to meet more people. Okay.
Yep.
And the rewarding part came when someone commented to say, hey, then I finally understood the concept you explained, your
Mm.
post has helped me see the market differently, or your post is very useful, has add value to me. I don't have to go and source the information myself and things. Yeah. So these are very comforting to know, and
Mm,
it really hit homes. Okay, so
mm,
it remind me why I've been sharing in the first place. To really add value to the investing community. But of course, I'm not so noble. Because what happens is that by sharing all these things, right, I think investor can make a more informed decision, and that will
yep.
create a more vibrant market. And as
Mm,
a reminder, I will also benefit from a more variable market. So it's like a win-win situation for the retail investors, for myself, and even for the market as a whole. So it's actually a ecosystem, I would say. Yeah. And for why invest SG and investing node is because they are a two-way street. Okay, two-way street. It's not just me talking. Okay. I mean, they leave comments, and I also read on other people's posts, including yours, James. Okay.
Yeah.
So
Thank you.
I actually learned a lot from the community as well. And
Mm.
you get so many different perspectives, from, as I mentioned earlier, from young investors who are just starting out to veterans who have seen almost every market cycle. Okay. Some even more experienced than me. So that kind of exchange of ideas really keep things fresh and keep me grounded to let me know that there are still very much to learn. Okay, because the stock market change every day. Even though you are very experienced in the market, there's always something new for you to learn. Okay, and one very important lesson that I learned is that everyone see the same thing differently. Okay, nobody have a monopoly of ideas. Okay, if you look at one stock, I would think that it's a good stock. You may think that it's not a good stock. Okay, but it doesn't mean that I'm right, you are wrong, or you are right, I'm wrong. It's just a different kind of perspective.
Opinion. Yeah.
And both of us will never know the answer until it happens. You know what I'm trying to say?
You
Yeah.
remind
So
me of Tesla. Very
yeah,
contrasting camps.
yes. So there are always different camps, right? Yeah. So these are things that I find it very rewarding, and why I have been continuing on this journey and things like that.
Yeah. Thank you so much for providing so much value. I mean, across all the
Thanks.
different platforms for all of us to, tap on your wealth of experience as well. Yeah.
I mean, we
So
learn from each other.
thank you. Yeah. So to wrap things up, right? My final question, if
Yes.
our readers want to take away just one lesson from today's chat, what would it be?
Well, I mean, if there's just one thing that I would like this audience or this everyone to know is that investing is a journey. It's not a race. Okay, so everyone move at their own pace, and I think that's perfectly okay. The goal isn't to time every move, to catch every rally, to make money out of every stock. We can't do that because there are so many stocks. Not to say on SGX or even in the world, we can't possibly catch every stocks. I think that the whole aim is really to really stay consistent, to keep learning, and to make decisions that really fit your own profile, whether it's your risk profile, whether it's your life stage profile, whether it's the sector or the team that you have conviction in. So I always tell my client or even my audience when I'm hosting a seminar or webinar that you don't need to be perfect profit. You just need to be patient. Market will go up and down. But if you focus on your own investment plan and build really good habits, time will do the heavy lifting for you. Also, investing is not only about buying. Okay, so the most common question as a reminder that I got is what to buy. Nobody have ever asked me what to sell. Okay, so what I'm trying to tell you is that an investment plan, right, is not only consists of the buying part, it also consists of the selling part. Okay, it is a plan. So don't run a race without a finishing line. Okay.
Right.
Have an objective, have a profit target, review that objective or that profit target from time to time according to the market condition and the news event and things like that. And stick to that plan. Okay. If it's time to take profit, it's time to take profit. It doesn't matter whether, after that it went up higher or came down lower. That is outside of our control. And maybe most importantly, I would say enjoy the process. Investing it's not just about the numbers. It's really about the mindset. Okay. So to learn, to grow, and probably to connect with others, and don't be afraid to ask questions because there's no stupid question. There's only stupid answer. Okay. Because at the end of the day, wealth isn't just built in the market. It's built in the mind. That's all I have to share with the.
So okay.
Thanks.
So thank you then
James.
for attending. See you
Thanks,
next
James,
time.
for having me. See you.
Thank you. Bye
Take
bye.
care. Bye.
Take care. Bye bye.